Welcome to the world of Test Portfolio XSX. This video was created with the help of artificial intelligence. It provides a weekly summary of key economic events. The featured portfolio is simulated, fictional, and reflects my personal perspective on recent market developments. My main goal is to explore whether the S&P 500 can be outperformed. To do this, I compare the performance of three different portfolios: my own fictional portfolio, an S&P 500 portfolio built using a lump sum investment strategy, and an S&P 500 portfolio built using the dollar cost averaging method. This video reveals which strategy performs best and why. Disclaimer: this video does not constitute financial advice and does not recommend the purchase or sale of any financial instruments. I do not take responsibility for any potential inaccuracies or errors that may occur. Ready to get started? Let's go. Let's begin with the week's most important news. The lightning-fast roller coaster of court decisions won. May 29th, New York. A three-judge panel of the Court of International Trade ruled that President Donald Trump unlawfully imposed sweeping tariffs by invoking the 1977 International Emergency Economic Powers Act, IEPA. In its 49-page reasoning, the panel emphasized that regulating commerce is constitutionally the exclusive power of Congress. Later the same evening, Washington. The Federal Appellate Forum granted the government an immediate stay. This means the tariffs may remain in force until the Court of Appeals rules on the merits. The White House, in Trump's reaction, spokesperson Caroline Leavitt spoke of judicial overreach and indicated they would take the fight to the Supreme Court if necessary. Trade advisor Peter Navarro stated that even if they ultimately lose the lawsuit, they will enforce the tariffs through other legal instruments. On his own social media platform, Trump posted a 500-word tirade against the judges, asking whether pure Trump hatred was behind the decision, even though he himself appointed one of the judges in 2018. Why did the court intervene? By invoking the IEPA, Trump declared the U.S. trade deficit a national security emergency and thereby bypassed Congress. The trial court held that the IEPA was not designed to address a general trade deficit, but specific narrow national security crises. Imposing import tariffs globally on a reciprocal basis, moreover in peacetime, far exceeds presidential authority. The court also noted that the administration failed to show how it would tailor the tariff universe to the alleged threat. Although the appellate forum has temporarily allowed the tariffs, it has not ruled on the substance. Months may pass before a final decision. 2. U.S. PCE data. The PCE, Personal Consumption Expenditures Price Index, is the United States price index for personal consumption expenditures. It shows by how much, on average, the prices of goods and services bought by households change. Inflation is decelerating. The April PCE index increased by only 0.1% month-on-month and reached 2.1% year-on-year. Core PCE, excluding food and energy, likewise rose 0.1% month-on-month and 2.5% year-on-year. Both readings are lower than in March. Fed message: Mary Daly, San Francisco Fed, called the figure a relief, but urged caution. A rate cut will come only if the trend continues. The market currently sees the highest probability in September. Market reaction: U.S. yields slipped slightly, and equity indexes rose, as investors priced in a strengthening disinflation trend. Inflation is indeed cooling, but the Fed is not applauding yet. Another 1 or 2, 0.1% months are needed before rate cuts truly get the green light. 3. Raising steel and aluminum import tariffs from the current 25% to 50%. On May 30th, at a campaign rally in U.S. Steel's Mon Valley plant near Pittsburgh, Donald Trump announced that he will raise steel and aluminum import tariffs from the current 25% to 50%, with the measure taking effect on June 4th. He justified the step by citing the protection of Rust Belt jobs and a national security emergency, invoking the same Section 232 legal basis used to impose tariffs in 2018. On stage, Trump also hailed the Nippon Steel U.S. Steel $14.9 billion investment agreement as a blockbuster deal, claiming that under new U.S. majority control the company's domestic identity would be preserved. During his speech, he sharply criticized the quality of Chinese steel and called the tariff hike the final reinforcement of U.S. industry. Market reaction: iron and steel-related stocks rallied after the announcement. Cleveland Cliffs jumped 26% in after-hours trading, while Steel Dynamics and Nucor closed up 5–10%, as investors priced in extra profit from more expensive imports. Ivor. New U.S. blacklist expansion regarding chips. The U.S. Department of Commerce is compelling several American companies not to sell chip design software, chemicals, or any other equipment essential to semiconductor manufacturing to China. Previous licenses have also been revoked. Existing export licenses have been cancelled as well, meaning that not only new shipments are blocked, but ongoing deals are frozen. Case-by-case review ahead. In future, every export application will be examined individually. There will be no more automatic or general licenses for companies in the chip sector. What is on the blacklist? Design software, EDA solutions. Specialty chemicals without which modern chips cannot be produced. Beijing's reaction. According to the Chinese Ministry of Foreign Affairs, Washington is weaponizing technology and thereby undermining global supply chains. The following charts show the performance of the main U.S. stock market indexes over the week. Let's look at the week's key earnings reports by sector. Technology. The AI frenzy remains the main driving force. Nvidia broke another record, $44.1 billion in revenue. They mentioned an $8 billion risk due to export restrictions on China, but the market swallowed it. The stock jumped about 5% after the close. Salesforce delivered the numbers and even raised guidance, but the $10 billion Informatica acquisition and slowing subscription growth spooked investors. 6%, the worst one-day drop in a year. Dell, with a massive AI server order backlog, $12.1 billion, raised its full-year profit outlook, yet the share price only climbed intraday and finally closed slightly down on margin fears. Zscaler reported 23% revenue growth and raised guidance. The stock popped 8–10%. Cloud cybersecurity still commands a premium. Marvell Technology issued a better-than-expected forecast, yet fell 5–6% because the story only met the basics and did not blow up. HP Inc. cut its full-year profit outlook due to tariff costs. The market punished it with 10%. NetApp, after a minimal EPS beat, issued a subdued Q1 guidance. The after-hours response was 5%. UiPath posted a beat-and-raise quarter. The stock strengthened about +3%. Consumer discretionary Ulta Beauty bounced back after the Q4 stumble. Plus 4.5% revenue, $6.70 EPS. The share price shot up 12%. Gap specifically warned that the Trump tariffs could slice up to $150 million off profit. 19% plunge ensued. American Eagle Outfitters reported a larger-than-expected loss and weak outlook, 2% slide. Message: premium beauty remains resilient, but a single tariff headline floors the apparel chains. Consumer staples Costco's Q3 same-store sales rose 5.7%, EPS $4.28. The stock broke out 3% to a new high. The membership model is still a gold mine. Takeaway: defensive discount chains keep pace, even in an inflationary environment. Healthcare Cooper Companies beat the EPS estimate but cut its organic growth target to 5–6%, which caused a 14% share price drop. The market has no patience for poorly communicated guidance dances. Summary. The week's narrative was dominated by technology AI winners. Nvidia, Zscaler, pulled the Nasdaq, while weak guidances, Salesforce, HP, NetApp, triggered immediate selling. In the consumer space, the premium segment, Ulta, was rewarded while tariff-exposed fashion chains, Gap, AEO, bled. Costco delivered stability, but Cooper brought an unpleasant surprise. The week, however, ended ugly for the tech names. My fictional portfolio has remained unchanged. I haven't sold anything and I haven't bought anything. I still see potential in the chip manufacturing companies. It's simply unpredictable when it will go up or down. Timing is impossible, and one thing is certain: nothing is certain. How do you see it? So let's see how the three strategies have evolved. Strategy 1, lump sum. One-time investment, blue line on the chart. The first investor bought an S&P 500 ETF on January 2, 2025, investing the entire $15,000 at once. They've held the position ever since. No additions, no withdrawals. Current performance: 0, 51%. The blue line reflects this result based on the most recent Friday closing price. Strategy 2. Dollar cost averaging. Gradual investment green line on the chart. The second investor splits the $15,000 into 12 equal parts, investing $1,250 on the second trading day of each month into the same S&P 500 ETF. This approach helps smooth out volatility and reduces the risk of poor entry timing. Current performance, 25%. The green line reflects this strategy, slightly outperforming the lump sum method so far. Strategy 3. My fictional portfolio. Red line on the chart. This portfolio is based on my own stock picks and investment decisions. It launched on March 19, 2025, with the full $15,000 invested in various individual stocks over multiple transactions. I've explained my choices in earlier videos. Current performance, 51%. Note, these performance metrics exclude broker fees and taxes. They reflect only market-based price movements. It can be seen that there is currently little difference between the results of the strategies. But my fictional portfolio with chipmakers is very volatile and dropped significantly on Friday. Which sector do you think will be the winner if you were to invest now? Thank you for joining us on this economic journey with Test Portfolio XSX. If you enjoyed this weekly recap of the key events and our portfolio's performance, give it a like, subscribe, and join us again next week as we review the latest market moves and the progress of our investments. Disclaimer. This video does not constitute financial advice and does not recommend the purchase or sale of any financial instruments. I do not take responsibility for any potential inaccuracies or errors that may occur.